The beginning of the new year means many are getting ready to file their taxes. Crystal Britt spoke with financial advisor Derieck Hodges about how to prepare.
And welcome back. We have Derieck Hodges here with us this morning from Anchor Pointe Wealth Management. We're here to talk about something nobody really likes to talk about, but how does the saying go? Nothing's sure in life but death and taxes.
That's it.
We're not talking about death.
No.
So we're talking about the other thing. Taxes. Yes, it's time to start thinking about that, unfortunately, but we need to start making some preparations now. So what do you recommend?
You know, it's funny, this is kind of an interesting time of the year where we're going to kind of be history teachers and think back in the past year. And I also want us to be thinking ahead to the next year's taxes. So there's a number of things kind of in play. So the first thing I would do is pull out your 2022 tax return, look what was on there. What documents did you use to prepare that return? And ask yourself, what things will repeat in 2023? So be on the lookout for the various tax documents and then identify which ones you would not expect to get again. And that way you can have a little bit of a punch list of what you should expect, and as it comes in your mailbox, or oftentimes it's now in your email inbox, you need to be looking for those tax documents.
And setting them aside and putting them in a place where you won't forget where you put them.
That's right.
I tend to do that sometimes. Like, where did I put that form? And so, yes, that will help keep you sane, because you don't want to be at the last minute trying to find all these pieces of paper.
That's right. And it will take probably well into February for many of us to get all the documents we need. And people with more complicated returns who may have things like K-1 documents, it could be longer and likely will be longer.
Do you recommend using the same tax preparer year after year, someone who already has all of your documents, or is it wise to switch and do it yourself or go to someone else? What do you recommend in that territory?
I'm a big advocate for using a tax professional to do your returns. I think there's a lot of synergy and efficiency if you go back to the same person, but ultimately it's about the outcome and the experience. If they're doing a great job, yes, absolutely go back. If you're not satisfied, then yes, you might need to look around, but I definitely love the idea of going back to the same person because of the efficiency. They'll have you in the system. It's just a lot easier for everybody.
Okay, that makes sense. And what about as we look into the next season? Are there things that we should be looking for as far as deductions, or, okay, maybe this year I'm going to submit this, or things that we should be looking out for that maybe we didn't think about, maybe we could get more back in certain ways?
That's where this time of the year is kind of interesting, is we can actually still have a little bit of a do-over, if you will, for 2023. Once we get past December 31st, then our tax year is essentially frozen. However, up until our tax filing deadline, we can do things like health savings account contributions for 2023. We can do IRA contributions. If I'm self-employed, I could do some kind of self-employed pension plan. So I can still affect my tax return for 2023 in 2024. Now, when we think about that, then we want to start thinking about 2024 income. Am I going to make more? Am I going to make less? And we can start thinking about how we want to react and respond to the tax code so it's more advantageous for us.
Right, and thinking about withholdings too. You know, say you owed a bunch last year, and no one likes to get hit with, I mean, those refunds are always lovely, but you want to keep your money throughout the year too. But say you owed a bunch. I mean, now's the time to be going to your employer and talking about withholding so you don't get hit with that big bill again.
Absolutely, and that's, I think, the right practical response is, I'm a big fan of kind of a $0 tax bill in April. I'd like to kind of not get a big refund, but I don't want to owe a lot.
Zero would be great.
That's right, just kind of get it close, and I think that's a great tip, is to go in, look at those W-4 withholding numbers, and possibly adjust those.
All right, anything else you can advise us, because no one likes this process, and we get angry about it, and we walk around the house, have to go to the tax preparer's office and get this taken care of for Uncle Sam. But any other advice to kind of keep it as low stress as possible?
Well, I think look at your situation and try to identify what things in the tax code can work for your situation. So For example, if I had children, small children, and they had some kind of daycare expense, I would ask myself right away, is there anything I can do to use that as an advantage? And so if I work at a company that has a dependent care reimbursement program, so a flexible spending account, I should really consider taking advantage of that. Also, health savings accounts, unreimbursed medical expense savings accounts, those are very powerful tools, and they're actually pretty easy to forecast. Most of us, have some baseline level of care, whether it's eyeglasses or dental care, and then just regular checkups that we know we're going to pay. Those are powerful tools that we ought to be taking advantage of. And then absolutely, most of us need to be investing for the long haul for retirement. There's massive tax advantages inside of a retirement plan.
And we need to think about that, and hopefully our tax preparers can advise us on some of those things, because I think the average person we're just trying to get through it, and just hopefully not have to pay a bunch of money. But we need to, go to somebody who's going to be able to advise, hey, have you looked at, A, B, C, and D? So that way we can get the best, bang for our buck, so to speak.
I think so, but I think also it's partly our posture. Most of us are so desperately just wanting to get our tax return done.
I just want it done.
Take an extra few minutes and work with your tax preparer to say, can we do a little bit of forecasting for the next year, and are there any changes in the tax code that might benefit me? So don't just close the file once the tax return's done. Get into that posture of thinking about the next year.
Right, always. And the child tax credit. I know that's going to be something. I know it was different last year, so any advice on that, just staying up to date on what is available and what isn't?
That's right. And I think the child tax credit, so many people don't qualify for it, but just understand there are some tax credits out there. Those tend to change somewhat from year to year, but absolutely be mindful of those, and then all of the key deductions that you can take advantage of.
Right, and if you donated to charity, if you have receipts and records of different things, keep those, because that might help you in the end.
Yeah, and charity's a tricky one. So many of us now, I think the number is something like 90% of tax filers qualify for the standard tax deduction. So in those situations, we actually don't benefit from our charitable giving because we don't itemize those deductions. So that's where having knowledge about things like donor advised funds, and if I'm 70 and a half years old, I ought to know about qualified charitable donations, QCDs. Those are really powerful tools that can help us still qualify for tax benefits when normally I might not qualify for an itemized tax deduction.
Okay, good to know.
So again, that's where we want to get very personal about what do we do with our money, and then try to figure out what things are in the tax code that might benefit me.
Good to know. Gosh, I think I could ask you 100 more questions, but I think we're going to be out of TV time. Derrick, thanks so much.
Good seeing you.
Happy New Year, all those things. We'll take a break. We'll be right back.